Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning on Friday, August 4th. So we had been talking the last couple of videos, and even in my webinar, saying near term, 2.5, 3 months, depending how you want to measure it, of really no weakness in the market. But at the same time, we really haven't seen sellers step up to the plate. We've seen some things stall out, but we hadn't seen sellers step up. This week was really the first where you could say, okay, the sellers are, I don't want to say taking control. That makes it sound like a sort of a big picture thing, but they certainly had a lot of strength. The major indexes, not so much. They're down, depending what you're looking at, 1 to 2.5% sort of on the week. But we just saw a lot of stocks, especially growth stocks, break down. And to be honest with you, it's been one of the worst earnings seasons I can remember. It comes after a pretty good run, so it's not the same thing, but there's quite a few landmines out there, especially on the growth side of things. Now, what do I think? We'll get into a ton of different charts just to show you what I'm seeing, but top line, what I'm thinking is, number one, a lot of growth stocks clearly have hit short to intermediate term tops. We'll see what that means. Does it mean they need to consolidate for 3 months? Does it mean something worse? Does it mean they need to, they're going to shake out and then bounce back and we're going to get going here in 3 weeks? We'll have to see how that plays out. But for now, on the growth side of the equation, we would be playing things cautiously and not just holding and hoping, doing at least some partial selling of some things that keel over. Number two, for the market, I'm not big into predictions, but we talked about, when are we going to get a pullback? We might be in this long-awaited pullback where the indexes do pull back a few percent. I'm not going to give a specific area, but just near term, I would think more weakness or at least challenging trading is likely. Not that we can't bounce on some inflation news and then come back down, that sort of thing. But number three, big picture, listen, I'm always open to changing. Maybe interest rates go wild on the upside and that really changes the landscape. But to be honest, they're really, the vast majority of big picture evidence remains positive, whether it's intermediate term trend, long-term trend, broad market. We haven't seen a rush in defensive stocks or anything like that. So as always, day to day, week to week. But to this point, I'm kind of thinking we're in this pullback. It's definitely worse for growth than other stuff. But I would expect once the selling finishes up, which who knows, it might take a few weeks, might not, there'll be higher prices down the road. In Cabot Growth Investors Model Portfolio, obviously we're more focused on growth. We have taken a few lumps. We're up to about 40% in cash. Could put some of that back to work, could raise some more cash. We'll just see how it goes. I'm not going to put it all back to work, 3 days from now or anything like that. But I do think that there are still plenty of stocks that are, taking the selling in stride, holding up pretty well, even seeing a couple names really fall sharply and then bounce right back after earnings. So a little bit of a shakeout action. But for now, I definitely think on the growth side, being a little cautious makes sense. If you own a bunch of like oil stocks and ETFs, you're probably not sweating it much, and I wouldn't either. But on the growth side, playing things cautiously here for the time being. Okay, let's hop into the charts. As always, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Again, like I said, if you own, and when I say ETFs, I just mean if you own the market, quote unquote, so far we've quote only pulled back about 4% high to low in the NASDAQ, okay? And that's, I think, the worst of the indexes. So you can see we're still hanging around the 25-day. This green line is a 25-day simple moving average. The trend looks fine. If anything, it kind of looks like you wouldn't even really notice what's going on if you're not looking at individual stocks, okay? S&P 500, the NASDAQ in the micro term might be the weakest, meaning the last week or two. But the S&P 500, similar spot here, 25-day moving average. And the broader indexes actually a little bit stronger here. Of course, they weren't as hot on the way up. But this is, IWM, MDY. The point here is that they've all come down. It's not like there's not a huge rotation into, the broad market out of growth. It's not that. Everything's kind of come down. But they've come down normally so far from a big picture basis, okay? Moreover, kind of when you look at, I'm just going to run through a lot of charts just so you can see what I'm talking about here, if MarketSmith wants to cooperate. So here's XLI, which is industrial stocks, again, pulling back here. This doesn't look like much because it isn't much, but it's down, whatever, 4 points or something in the last few days. But, just hanging on the 25-day line looks totally normal, especially in the context of the prior run. IYT, this is the Dow Industrial, so trucking, airlines, stuff like that. Again, it has taken on some water here to the 25-day line, but number one, it's only to the 25-day line. Number two, in the big picture, it's not a big deal. Even XLF here, financials, finally kind of ramped up here, having their sort of first pullback into the 25-day line. starting to bounce. So with that sort of thing, we're not seeing much of anything. I wouldn't say it's across the board, but you're starting to see more again. We mentioned this with chip stocks where it kind of looked like something called an ascending base, and it could still be that, but you're getting to the point now where the SMH is basically unchanged here since late May, since Memorial Day. Is that acceptable? Yes, it's acceptable. It's kind of right down to the 50-day line. So is this going to be a good entry point? We'll have to find out down the line. But so far, you're kind of seeing a little bit more kind of stalling out in that sense. So, and you're just looking at other, again, I don't want to key off the ARK fund or whatever, but this is kind of classic sort of hyper growth, I guess I would say, however Kathy Wood is managing it. And, it accelerated higher here in early July, but since then it's been a pretty sharp pullback, almost to the prior high, to the 50-day line. Just seeing a lot of that sort of action in terms of growth stocks, okay? Now, so that was kind of like on the one hand. On the other hand, and now here's like a third hand, if you have a third hand. This is XLP again. Now, some of this is interest rate sensitive. We're going to talk about in a second, but I'm not seeing this yet, okay, where XLP is doing this and all the growth stocks are getting hit, and the NASDAQ's getting hit, but the Dow is up 500 points today. You start to see that on a regular basis, then it's kind of like, okay, this is, people are really positioning differently. But so far, defensive stocks have perked up. They've outperformed a little bit, you can see here. But it's not a big, character change in my view. And when you look at some other stuff, like utilities have been kind of weak, obviously, with interest rates. Defensive healthcare, even we had mentioned it popped. This is XLV, but pulled back. So, again, I just think, I'm always open to changing, but bigger picture, I would just, I want to play the odds. So the odds to me strongly favor us having some more weakness or some more challenging trading, as I would say. Maybe it's consolidation in the indexes, but more landmines, individual stocks or something like that. But the odds favor some near-term challenges, but some higher prices down the road. In a way, I do think that this pullback, which stinks, don't get me wrong if you're getting caught in some of these things, but it is going to be setting up kind of a nice leg higher. So if you can kind of keep your wits about you and just keep some names on your list and be ready to buy them at good entry points, I think there's going to be, this is setting up some good things down the road. Just to hammer home the point, though, a couple other things. This is, I mentioned, chip stocks, but there's been a ton of them. This is Fortinet, which has been kind of a, I don't want to say it's like the biggest leader in the world, but you can see it's been acting well for months. It's sort of one of these, not a hyper growth cybersecurity, but solid numbers. And you can see all the green. Reports earnings today, and it's down 24%, as I record this. Shopify wasn't as bad, but again, here's a name that acted well, kind of tightened up, was looking really good, and now just kind of sliced its 50-day line on earnings. When I look at a chart like this, there's a lot of charts like this that are it's not, Fortinet is blowing up, but there's a lot of names like this where I'm not saying if it goes back up here, it's a strong buy, but it wouldn't take 6 months to repair the damage on this chart. It's not some major damage. So we're seeing a lot of short to intermediate term breaks that I think should be respected, but they're not, there's not as many. There are some blowups, don't get me wrong, but they're not like all across the board. Palo Alto Networks is falling today in concert with FTNT. HubSpot, here's another example, kind of like Shopify. You look at the weekly chart, nice bottom. It's had a persistent run here, clearly kind of an short to intermediate term top. I think there's no doubt big earnings gap down. Maybe it unravels, we'll see what happens. That said, given the run and everything, it hadn't broken the 50-day line since January. This might just be a name where, hey, come back in September, October, if the thing is rounded out, it's set up again, it gaps up on earnings, and it's off to its next run. So I'm seeing just a decent amount of this stuff after the move. Last but not least, before we get into charts, a lot of preamble here. Again, just keeping an eye on interest rates. This is the 10-year note. And on the daily chart, it's not so much that interest rates go up, it's the speed. So if they really, just accelerate. So, I mean, this week before today, now today it's down 9 basis points or whatever, but before today it was up like 20, 25 basis points on the week, a quarter point on a week. And it was up, 45 basis points over this last, couple of weeks. So, obviously if this thing really kites higher, I mean, never say never, but it's going to be a headwind for the market. In a sense, we'll see how it plays out. In a sense, I actually kind of think when you're looking at the S&P or whatever, the fact that the major indexes have been able to kind of pull back 3% or something like that, while interest rates have tried to spike, isn't the worst sign. So we'll see how it plays out. But Interest rates are one of those secondary measures that are secondary, but they were the big driver last year. So you don't want to leave your brain at the door, like I've said before. Let's see what happens. Hopefully today is a big reversal and we start heading down in interest rates, which can be a tailwind for the market. We'll see how it goes. Okay, now into individual stocks. You're looking for things that obviously are holding up well, but you're also looking for stuff that maybe is shaken out and come back, or just something where you can say, hey, in a week or two, this could be viable, something that could be viable near term. So this is Confluence, CFLT. We had mentioned this and been watching it for a while. Nice bottom, and it ramps for a few weeks, and then really tightened up here, nice consolidation. But again, these things tried to go here in July and were immediately sold into. And you can see this thing went from 41 to 31 in 2 or 3 weeks, whatever the hell it was. But yesterday was what I call over-the-top volume. I tweeted about this. You can follow me it's just at Mike Cintolo. You get what you pay for on Twitter, but I usually post some things. Over-the-top volume, higher volume, big and higher volume than the day or two before, after a big drop, kind of just comes right back after the selling. And it's up again today. We'll see how it is, but when you look at the weekly chart to take out all the noise, you had the reversal and the drop, but now you're having a big volume support week. How does that play out? I don't know, but it's still on my watch list, and that's kind of a nice shake and snap sort of action. We'll see how it plays out. Samsara IOT, I seem to mention this every week, but it's just one of these things where, if you didn't know anything about interest rates, you'd say, okay, it had a good run. It pulled back to, $25, pulled back to $25, pulled back to $25. Hey, maybe next week it blows through $25 and gets nailed, although they don't have earnings for another month or so. But maybe it really keels over. But at this point, it also wouldn't take much for the stock to really break out on the upside. So IoT is also on my watch list. And then just kind of getting into some random names. This is Freshpet. They do have earnings next Monday, I think. So, buyer beware on that sense. But Freshpet's just, the basically Gucci pet food, so to speak. It got destroyed, had some company problems. I did mention it, I think back in here, it tried to get going, but you basically have this nice long consolidation, and then look how tight this recent consolidation is. It's not the thickest stock, and that has been kind of poison lately. The liquid names have held up better, generally speaking, than some of the others. But the stock is trying to get going here after some tightness. It's got earnings, so if it did gap on earnings or something like that, it could be maybe playable, just flagging it. OLLIs, I mentioned this a lot, but just look again, pretty tight in here. The last couple of weeks, you would know the market's kind of gone haywire on the growth side. Again, you have this sort of big launching pad. It's not like it's been, skyrocketing for 2 months, but it did kind of change character in here, and I just like this sort of consolidation. Not telling you where to buy it, if to buy it, how much or whatever, but the overall pattern looks pretty good. On the fastball side of things, again, this does have earnings on Monday, but Palantir, it's intriguing to me. You have this completely, it's almost like all this stuff from here, I don't even know if you can see this whole chart, but it's almost like all this stuff in its past is sort of, it's there, but does it matter? I don't know. After the AI thing started, after you had this massive volume run for 5 or 6 weeks or whatever it was, it's like the stock is just a totally different stock. In fact, it's only had one down week in the past, whatever. So maybe that means it gets hit on earnings. Who knows? We'll see what happens. But so far, you can see it's been pulling back here very grudgingly, well above its moving averages, okay? Boot Barn, this is a name that it's been on and off here for years, but, it had a huge run post-pandemic, bear market, rallied, and then kind of failed here, but sort of built this new base. And now it's been up 1 million weeks in a row and reacted well to earnings. Would I chase it here? I'm not going to say. You decide what to do, but I do think it's certainly showing some signs that it's ready for a bigger run when the environment improves. Let's put it that way. FSLY, again, I wouldn't say this is the biggest leader of all time, but it's CDN Network or whatever. Obviously got destroyed in the bear market. Had a huge post-pandemic run. And it's just been futzing around here. Again, it's kind of lower priced in the teens. Try to get going, keep failing. Now on earnings, you can see, kind of would hit higher highs a little bit, but now it's trying to, really good volume clue yesterday, even when a lot of growth stocks were still getting hit. So that's kind of interesting to me. And then just one from the old crowd here on the growth side. This is Cloudflare, NET. It's not gonna return to its former glory, I don't think. In terms of being some major leader. But again, you just have this huge bottoming action, big shakeouts, bad news, slowing growth or whatever. But the numbers are decelerating some, but they still look pretty good. Earnings are certainly picking up. we'll see how it goes. But I just noticed it was popping on earnings today. It is near multi-month highs, and it's doing this, I don't want to say a market correction, but you know what I mean, during a kind of rough stretch in the market. So just kind of flagging it for you. Outside of growth, again, just I'm sort of charting you guys to death here, but still decent amount of strength in housing. Some of it's come down, like home builders with interest rates, but this is TopBuild, BLD, just kind of, trending higher basically, just started trend higher here for last month and a half. Hit the 25-day line, reacted well to earnings. That looks pretty good. The bull market stocks I find interesting. They still look pretty good. So this is Apollo, APO. Now, full disclosure, we had recommended in top 10 a few weeks ago. So I said maybe take some partial profits into this move. So just so you know what I'm thinking here near term. But just in general, you're looking at, strength in the bull market stocks. Blackstone, not as strong, but still kind of holding this earnings move and this volume cluster. We'll see how it goes. But again, you're not far from like kind of a pullback resumption pattern there. Boeing, just mentioning Boeing, has pulled back, but look at the volume on the pullback. Looks fine so far. It's been kind of a touch and go stock, so who knows? But it definitely, this week doesn't negate last week, I guess is my main thought on that. And then oils, you know how I love oils. No, oils are tricky, but there's no question that the group does seem to be moving. And again, I'm intrigued that the group is moving when oil is, don't get me wrong, oil prices have gone up, but they've gone up to $80. It's not like they're up at 110 and everybody's talking about oil. So Noble remains kind of a leader, reacted well to earnings yesterday, toying with new highs. Transocean's been in top 10 trader, lower priced, a little bit lower quality, although it's actually I think it's the same market cap, but acting pretty well here. The Explorers, so CIVI, this has been messy. This is Civitas, CIVI. They have a big acquisition they're kind of doing, but it's just kind of had this long, endless consolidation. This chart is not dividend adjusted either, so it's really actually kind of closer to its highs up here. Northern Oil and Gas, this was in top 10. You can just see it's kind of accelerated higher, reacted well to earnings. Oil stocks, probably better buys on dips in general, but who knows? The group is acting well. Weatherford is an oil service name that's very strong. WFRD, they've already reported earnings. And then some other metals, I'll just mention Southern Copper, kind of a neat weekly chart here where it's been at, what's this, $80, but this chart goes back 2 or 3 years and just, 80, 80, 80, 80, and now it's it's at 83, 84, so I'm not saying it's not at $100 sort of thing, but certainly trying to change character. So there's definitely more strength, like I showed you in the transports and the industrials and some of the building stuff and some of the metals. You're seeing some weakness some places, not in oil, but you're seeing some weakness, but it's definitely normal. I would say growth is, I don't say abnormal again, like I do think I'll be doing a video here 2 months from now or whatever and saying, wow, this looks great, this looks great, this looks great. But right now, I definitely think that some of these names have had big runs. They're hitting resistance. They're starting to break down. And when things blow up, you want to take action, okay? So don't just hold and hope. I think you should do stuff like that. But in general, I would say cautious for now, expecting some more reverberations here for August. We'll see how it goes. But keep your eyes open, try to look for high risk reward trades and keep your eyes open for some of those, because I do think when the market turns, whether it's in 2 weeks or 6 weeks or whatever, when the market turns and growth stocks kind of get back in gear, I do think there's going to be quite a few opportunities if things play out the way the odds favor. Okay, that's all the time I have for today. Thanks for listening. And as always, come by again next week for another Cabot Weekly Review.